Welcome to my weekly review. Today is Saturday, June 28th, and you're looking at a daily chart of the Nasdaq, which had a very strong week last week. It was up on Friday, 106 points or 0.52% and closed at an all-time closing high of 20,273. The index is now a couple things here, a very eventful week. The index is now 8.7% above the 50 and 8.6% above the 200. You can see the 50 is trading through the 200, which is known as the golden cross. And it has been bullish, over time. I guess since I did this with my subscribers the other day, I'll do it again here today. The last time that we had a golden cross was back in 2023. I just switched the date to 2023, where we ended the 2022 bear market. If I go to the weekly, you can see this long 11-month bear market where the index lived below the 200 for a long time, then rallied back through. So if I go to a daily chart, you can see the 50, which is this red line, trading through the 200, which is the black line, and that's what's known as the golden cross. And we know from history that 2023 and 2024 were phenomenal years, and then we rallied for a long time, but we had a bear market recently. This is our fourth bear market in the last 8 years. We used to have one every 4 or 5 years, and now we're having them every other year. We had a bear market in 2022, which I just showed you, and this is a 27% correction from peak to trough. This 20,204 on December 16th down to 14,784, which is a 27% correction, which is, in terminology, I guess you call it a bear market. But we've had a 37% rise here to get back to even. So there's a lesson in that you can't absorb big losses because a 27% loss requires a 37% gain just to get back to even. And that's why we keep our losses at 4 or 5%. And, that way you don't have to, the ratio is, if you hit 500 and you have a couple of two baggers or even 10, 20%, you can afford many, 4 and 5% losses. And that's the formula, the winning formula. Anyway, I'm going to get back to, well, I'm going to go to the weekly chart first here and just show you these bear markets. Actually, I'm going to go to the monthly because I talked about the bear markets here. You had one, the dot-com crash in 2000. You didn't have another one, which was a 3-year bear market with the dot-com and 9/11 combined. It was like a 3-year bear market. And then you didn't have another one until 08, 07, 08 and '09. So there's your financial crisis. And then we didn't have one for a long time. We had in 18, you had a 24% correction in October through December of 18, and then you had your COVID crash bear market. You had your the interest rates going up, your Jerome Powell bear market, and then recently, we had, I guess you'd call it your tariff bear market. But anyway, we're back to even now, or actually at new highs. So anytime you have a new high on a stock or an index, it's a bullish sign. Last week, as we started the week, it looked like we were going to have a World War III, and I'm just kidding. But we went from, this end of the world type scenario to new highs. And I'm going to go back to the weekly, and that's why you have to be open-minded and flexible. For the week, the Nasdaq was up 826 points or 4.25%. Volume, which I don't really care about, was a little higher than normal, 5%. Anyway, that's the Nasdaq. To me, this is bullish, and I'm not just bullish just to be bullish. I'm bullish because we have a lot of stocks setting up, and every weekend, I look at all these charts and it's bullish. So that's why I'm bullish, is because we still have stocks setting up, not because I just feel like being bullish because this sucker's going higher, as Peter Lynch would say. I'm going to get to that at the end. The agenda for me today is just kind of review the weekly events, go through some earnings calls and just some news related items. Then I'm going to go through some leading stocks and then my ready list from last week and how they performed, and stocks that I just mentioned that are setting up. I'm going to go through a few of those. All right. Just once again, 20,204 to 14,784 is 27%, and 14,784 up to 20,273 is 37%. So that's the ratio of why you cannot have big losses. All right, I'm going to go to the S&P because it made a high as well. It looks pretty similar. This is a weekly review. It was up 3.4%. By the way, these indexes are up 5% this year. Most of the heavy lifting was done just last week. This is up nearly 3.5%. So to me, this is bullish and just getting started. We got through the bear market, and now I believe as it breaks out above that 61.47, we're going to start a new bull market or continue our uptrend. People ask me often, I'm going to go back here to the daily chart. How long can we expect this to last? Well, usually a rally lasts, I don't know, anywhere from 12 to 18 weeks, and we're 11 weeks in. So, yeah. I expect this to continue higher, not just because of, it's done it in the past, like, your rallies last 12 to 18 weeks, but also, like I mentioned at the end of the video, I'm going to get to some stock setting up. All right. So we made it from World War III to the golden cross here. The S&P is a little bit behind the Nasdaq but that you can see the 50 is going to trade through the 200. Anyway, I'm going to get off the indexes. And excuse me, I'm going to get to stocks because that's what I like to trade, stocks. I don't trade the indexes or ETFs much. And there was some news last week with NVO and to start the week, NVO and HIMS and HERS, and it didn't bode well for either one. NVO was down 7% last week. HIMS and HERS was down 23%, got hit as they pulled their drug. It wasn't the fact that they're, losing the revenue from Novo, it was just the threat of litigation. I think HIMS and HERS will get past that. I'm not saying it's going to make a new high anytime soon. It's probably going to form a base because it had that violation of the 50 and then rallied back through on Friday. So a positive sign for the HIMS and HERS longs, and it closed 3.2% above its five on Friday, and what it's 5% below the 21, and it's 1.2% above the 50 now. So it closed above the 50, which is positive sign for the HIMS and HERS longs. It took its hit and now it's starting to rebound, and closing above the 50 is a positive sign for that. Company, a couple other things I need to get to, just news related. Syngin, I got to go to the weekly here because NVIDIA they had a deal with NVIDIA and the stock was only up 308%. You can't even see it on the daily chart, the move, because this was a $2,000 stock not long ago. And now it's last week it went from, I don't know, like 4 to 16. So good week for Syngin with the deal announced with NVIDIA. And then Palantir. I got to get to Palantir because a lot of people are asking me questions about Palantir. I think this is just, end of the quarter profit taking, maybe rebalance, kind of a mechanical thing. There's nothing that the company did wrong. In fact, they announced contracts, but yeah, sometimes when the indexes rebalance in the end of the quarter, you get some wonky moves. This is a 5-minute chart. You can see they just started selling immediately on Friday. The first 5, 10 minutes, this thing fell like a rock. I was out golfing. I was not paying attention to the market yesterday. But when I got home, I could see that, it was totally weak and should have bought puts, but I didn't. And then the last, it was weak all day. And then the last, 10 minutes or so, we saw it diving there. And so a lot of people are worried, is Palantir going to, slice? It slices 21 and closed 2.9% below the 21. Is it going to go to the 50? Is it going to slice to 50? Well, you just got to wait and see. My thinking is this is going to rebound fairly quickly, and then it's more mechanical than anything else. All right, I've got to get to some other stuff here. These guys, AV, Aero Environment, they reported earnings, and I would say they had kind of a positive response to the earnings report. It was up 21, call it 22% following the report on Wednesday. Thursday added on another 16%. Thank you very much. Up 2% on Friday. That makes for a 46, 47% week. So congrats to the longs there. If it just breaks out of this, this nice little, base here, that looks like textbook stuff to me. Breaking out above that trigger and very nice. 278. 300 is in the cards for that one. A magnet for 300. All right. KBH reported, and not such good news for the home builders, although it was up 2% on the week. The report was bad, and when stocks stopped going down on bad news, it's all priced in, probably a bottom, but this bottom could last for a long time. So you got to be careful here, not just to buy and think it's going straight up. It could sit down here at this bottom here for months, quarters, or even years. So watching the home builders, maybe lower rates will help them. It should, but that's a little bit. It's a ways off. I think the market's sniffing out the lower rates, and that's why it's rallying. One reason, but yeah, the home builders are in bad shape. Carnival reported. Had this nice cup with handle pattern, nice response to their earnings report. Carnival was up 15% last week. We'll take that every week. A couple of companies that didn't do quite so well. Fred Smith, FedEx, he passed away last weekend, and the stock reported earnings. They have a new CEO. He was CEO up until 2022, but it responded okay. It was up more than 1% last week. General Mills did not fare so well. They are unable to gouge customers anymore, and they was down 5% last week following its earnings report. Yeah, they did. They raised prices, after COVID, but consumers pushed back, and so that is no longer an option for General Mills. Paychex, terrible response to earnings. This thing was down. We'll just go to the weekly here. It was down 4% last week. Not bad. The initial reaction to earnings was nearly a 10% haircut for that company. All right. All right. Micron reported a stellar quarter, outstanding quarter, and the stock sold off because, it's buy the rumor, sell the news. All the good news was priced in. People were expecting this, triple digit earnings growth, I guess, and, 37% sales growth. If I go to the weekly, you could see the earnings line, heading due north and the estimates going forward. Very strong. So this is a cyclical business, computer data storage. I think they're going to continue to do well. But, like I said, that doesn't mean the stock's going to be ripping like crazy, even though the business is doing well. But I do believe that this is the 5 EMA and it closed, right at the 5 EMA. So it could bounce next week for Micron. Nike reported, they said the worst is over. And the market responded, nice 15% gain on Friday. It's up against the 200 right here, probably get rejected. I'm kind of doubtful of Nike and their management and that the worst is behind them. They have huge inventory. They're not innovative at all. And just other companies are taking market share from them. All right, that's it for the earnings calls. I'm going to move on now. I'm going to go through some leading stocks, and it's very tempting to own, leading stocks that are trading above the moving averages. I post a list every morning of the stocks that are trending higher, and it's fluid. It's a fluid list. Some stocks, get on the list, and other stocks, fail and are off the list. This is AAOI, and this one obviously trending higher. The 5 EMA now is serving as support for this stock. What you don't want to do is take a look. You're going to look at a lot of these stocks here that are just looking like this, that are going straight up. And what you don't want to do is to go in and out of stocks. Just pick your stock and ride it. As long as it's surfing that 5, don't be switching back and forth because it has a bad day and it undercuts the 5 like it did a couple times here. You got to stay with your stocks, because if you switch off to another stock, it's like being on the freeway. I'm from California and I know all about freeway jams, as Jeff Beck, his instrumental song Freeway Jam, phenomenal song, Jeff Beck. But I'm from California, so I'm used to being in traffic, and what happens is You get in a lane and it stopped. And so you switch over to another stock. You switch lanes and because it's moving, right? And then you get in that lane and it stops. And then the lane that you were in starts moving and you want to get back in that lane. Don't be doing that with stocks. That'll hurt your performance. AEVA, yeah, it's going to sell off a couple of days here and there, but you got to stay with these things. Same with ASTS. Space Mobile, yeah, pulled back a couple of times to the five, but to me, you can see the David Ryan answer. It's just surfing the five. So stay with it until that trend bends at the end, and don't be switching in and out. That really hurts performance. And if you have a bad day or two, that's just part of trading. That's part of life in the big city. So yeah, don't change lanes. The other lane's not going to go faster than these leading stocks. Just pick them and ride with them until they bend at the end. This is Avis. This one was on a monster roll, had to pull back on Friday, and it did, nearly 3%, but still it's 3.9% above the five. People ask me about chasing stocks. Yeah, if you were to buy this stock here, that would be chasing. It's too far above the five. Wait till it pulls back to the five and see if it finds support and bounces, and then that's your opportunity. These things are not going to set up in bases and make a nice cup with handle pattern for you. They're just too much demand here. CLS. Another one, this is what I talk about, leading stocks that are, set up in bases that look fantastic. Just broke out last week above, this is a nice little base here. Once again, just surfing the five, right? Yeah, and it pulled back one day to the five here last week, or I think it was up every day last week. Yeah, the week before, and just making new highs. Yeah, 13% last week. Who doesn't want 13%? So with the index up, what did I say? 4%? Or did I say? Maybe I didn't say. Sorry for going back. Yeah, the index is up 4.25%. I did say that. And so you got to expect your growth stocks to be up 8, 10%. And, that's outperforming, and that's what they do. Also, when the market corrects, they correct twice, two or three times the index. So CLS, a clear leader, COIN, Coinbase, another one up, nearly 15% last week. Once again, just breaking out. To me, this is just breaking out of this, consolidation pattern since last year. You could say that was your little handle here and exploded 3 weeks ago, but it's been up the last 2 weeks. When it broke out, 27% and 15%. So thank you very much, Coinbase. All right, other leaders. I had CRDO on our ready list. 2 weeks ago as a pullback to the five. See, they're just finding support at the five. And so, like I said, they're not gonna they're not gonna set up a nice little cup with handles for you or double bottom. They already did that. And now they're running. So, they support at the five. That's it. And all these stocks that I'm showing are pretty similar here. Support at the five. This is Dave. Pull back one time to the 21, and that's it. Off to the races. Our rich Uncle Dave looks fantastic. Robin Hood pulled back on Friday, but once again had a phenomenal week, up nearly 6%. Just looks like it wants to run to 100. That would be, that's my expectations. This is a JBL. They reported 2 weeks ago, and they exploded higher after their earnings report. Yeah, up 30% 2 weeks ago, up 5.5% last week. Pretty clearly a cup with handle pattern there on the weekly. What does it look like on the daily? Yeah, look at that. Just tight trading, then boom. Now it's got those David Ryan ants going on. All right, NBIS. This one pulled back the prior week right here to the 21. Found support, bounced nicely. Last week it was up 8%. Yeah, I think that's pretty nice bounce, 8%. Net, this is one that nobody talks about in the cybersecurity. We always hear about CrowdStrike and Palo Alto Networks. Um, Cloudflare, this was on my ready list last week, 8% gains. I did not buy it, but you could see the breakout here. Looks almost like a 3 weeks type pattern, not quite. But yeah, cup with the handle and just adios, muchachos. That thing's off to the races. There's Cloudflare. There you go. There's your handle. People are questioning me. Does this thing make a handle? Yeah, when it pulls back here. Yeah, that's enough. And then it's off to the races, 200 in the works for that one. OUST, Ouster, this one's just like AEVA. These things are just one-way stocks, just surfing the five. You ride that trend till it bends at the end with all of these roadblocks. I know people saying, oh, was going to have trouble at 100. It went through 100 like poop through a goose. Yeah, just surfing the five here, like Kelly Slater, man. This just these stocks, thing of beauty here, strength all over the place. Rocket Lab, and this is why I'm bullish. Not only these leading stocks that are trading well, but the ones that I'm going to show you here that are set up in basis. SEZL, this one came back to the 21 that one day they threatened litigation against Shopify. Just surfing the five there, beautiful. Yeah, SEZL is on fire. SEZL is sizzling. TSSI, another one with the David Ryan ads here, surfing the five, and then TTMI. That's my top, I don't know, 25 stocks or so that are on my list for last week. New week, we'll have new stocks, but these ones definitely surfing their five. All right, that's it for that session. I'm going to go from leading stocks to my ready list from last week. This is just a review. And like I said, all you need is a 50% win rate, and you keep your losses small, and you get a big gainer like CoreWeave. I just shared with my group, my quarterly audit. I think it was up like 15%. And this is one of my big gainers from the quarter. So if you get a two bagger or more, that makes up for a lot of, 4 and 5% losses. So CoreWeave was my workhorse for the last quarter. And like I said, I'm up, I don't know, 15% this year, which is okay because the Nasdaq and S&P are up 5. So my goal here at my age is just to beat the S&P. I'm not trying to take risk and make 3, 4, 500%, which would be nice, but I'm just not willing to take the risk or be fully invested. To me, like 80% is fully invested because I always want to have cash for an opportunity. And I want to have, cash because I don't want to have it all invested in case something goes wrong. All right. I'm going to go through my list last week. And remember last weekend, it was like Armageddon, right? The US bombed Iran and oil was flying and gold. So I had a couple of oil and gold stocks on my ready list and they did not pan out, no pun intended. Down 4% last week. So that's a fail and it happens. Every stock that I have on my ready list doesn't go up 10% each week. So that was a fail. AMD, this is one that I did buy, had on my ready list. Should have bought it a long time ago. Kind of waited till it got above the 200, but you can see the demand here to move a stock like this from 76 to 145. That's you know, it's a lot of demand to move all of this supply. It's got, look at how many millions, billions of shares, at 1.6 billion shares. So it takes a lot of demand to move all of that supply. And AMD, this is not Aunt Sally buying this stock down here. I make fun of volume because on the indexes we see, these dollar and penny stocks. We're trading millions of shares, which rises the volume for the Nasdaq. But when a company like this gets these big blue volume bars, those are institutional footprints, and the institutions are buying AMD in anticipation of strong earnings reports going forward. They have been delivering good earnings reports though. Look at this accelerating sales growth, 9%, 18%, 24%, 36% they're going to report on August 5th, which is, right around the corner. And strong earnings and sales growth, that's what's driving this stock higher, and also as well as the institutions that are buying it, that's what's pushing it higher. Anyway, that was a good trade for last week. Another one that I had on my ready list last week that I know some folks bought was a CEG. Alternative energy is one of your stronger industry groups. You could see, number one, can't get much better than that. But still, to me, this one's set up in a base, even though it was up 5% last week. I think it has room to run. I don't know. I might put it on my list again if it, pulled back to the what, 5 on Friday. I ran up to 328, closed at 320. Yeah. So it's 5% above the 21 and just a tick above this 5. Let's take a look at the weekly here. Yeah, up 5%. I don't know. I still think I think that's still actionable here for CEG. Look at that selling. We ran up, gapped up at the open. It was up most of the day and then into the close. We saw a lot of selling. It was a wonky day on Friday as we end the second quarter and begin the third quarter next week. And Friday, the markets closed due to July 4th. Yippee-ki-yay. All right. Another one on the list, GEV. This is one that I own. Sometimes I feel conflicted when I put stocks that I own on the ready list because it's like self-serving, right? But this one worked out well for folks. Yeah, it was up, almost 7% last week. This is the one, if I'm going to own an energy stock, this is the one that I want to own. There's a lot of them that I like, but I only want to own one. And so I just selected, GEV. And I'm going to ride it until, something breaks down. So anyway, not that you care. HNGE, this is a IPO stock that I put on the ready list above the IPO price. Had a nice week last week. It was up 3.5% Friday, up 11% on the week. I think we'll all take that. I don't know many folks who no, nobody responded to me on this one, but you could see the blue dot here. I think this one could go much higher. This is one that's got, this growth profile that we like. Well, what do you mean by that? Well, 24% sales growth, 44%, 50%. So that's heading in the right direction, right? But anyway, okay, I'm going to move on. It was a good trade. If you picked it up, congrats. I mentioned net earlier, so I'm not going to go through that. That was on my ready list as well. Odd had an odd week. I put it on the ready list. It didn't do anything, nothing all week until Friday. It was up 4.5% for the week. And it was up 4.5% on Friday. So all the heavy lifting was done in one day, which was Friday. Yeah, I don't own that one. I went through a Palantir already. It was on our list, and I showed you what happened to that one. PRIM. I love this group, the heavy construction group, building data centers. Primoris, another one that I think could still be on your ready list, even though it had a good week last week. It was up 8%. You can see this cup with handle pattern that broke out of that little wedge here. A little 5 week flat base. I guess you could call that a handle. Let's take a look at the daily. Yeah, that's a pretty long period there to be consolidating within a handle. Um, but yeah, broke out last week. It could appear on the ready list still, though. There's a lot of them in this group that I'm going to get to them in a minute here. TOST, another one on the ready list, still consolidating. No great shakes for this one, right? Yeah, just up 3.5%, almost 4%, which was below what the index did last week. The VG, this is my oil stock. I mentioned that I had oil and gold, one stock each, and it bombed 17% as oil went from like 75 to 65 last week. This is another IPO. Good size company, 38 billion. Recently reported strong sales growth, but pulled back here to the 21. So I'm going to keep watching this one. It's got a natural gas component, which I like. Yeah, not just oil. All right, I'm going to move on. VRT, another one that I like. I still like and still building the right side of this space. Let's take a look at this on the weekly. This is a weekly review, and yeah, I still say this thing is setting up here. After consolidating, of course, we had the big tariff correction or whatever you want to call it. And now just kind of flattening out. Yeah, it was up 7% last week, so probably a little extended on the daily. Yeah, 3.3% above the five. That's pretty rich. Let it pull back to the five, even if it's at higher prices. But yeah, I like that one as well. And the last one is Zscaler, just slightly pushing away from this 3 weeks tight pattern. It was up 4%, just like the index. Just 3 weeks tight. And yeah, closed near the highs of the range here, 90% of the weekly range. So Zscaler still looks good, pushing away from that 3 weeks tight, which is an add-on, buy point here. And I just think Zscaler goes higher. And if it does it gradually, just surfing the five like Stephanie Gilmore, yeah, it can surf all at once. I think that's a hold as long as it keeps, trading with that green line. As the green line goes higher and it stays above the green line, you're making money. All right. That's it for me. Thank you for watching. Except at mcstockcharts.com, we always like to honor the great Steve Jobs and stay humble and stay foolish and stay hungry, as he would say, and never give up, of course. But I mentioned this group here. One more thing. This group of building heavy construction stock, which I like a lot. AGX, which was a leader, went up to 246, just pulled back, undercut the 21, and now has rallied back above it. That's one that I like. Quanta Services is this one. I should own this one. I don't know why I don't, but I don't. Okay. So maybe if, yeah, bounced off the five. Let's see what kind of a week it had last week. Yeah, outperforming the index, had that 3 weeks tight, as well as a Zscaler. And what was the other one? DoorDash. Yeah, DoorDash had a 3 weeks tight and popped 10%. And I get off track again, going on a different tangent of 3 weeks tight patterns. But uh, I mentioned PRIM. I had that one on the ready list as well. Last week it was up 8%. STRL Sterling, it's a construction data center play. To me, this is just breaking out of the base. Yeah, it was up 6%, probably extended from its five, yeah, 2% above the five. And it's just surfing the five just so beautifully. There's no sell signs here, it's not crashing through, no big heavy sales back here there was, back when we were got before we got liberated, I guess you could say. But just a lot of them in this group. TPC, Tudor, Perini. I don't know Tudor or Perini, but just surfing the five is a thing of beauty. Once again, just a little bit above, 3.8% above the five, which to me is just a little too rich to be taking a bite out of that thing. Road, this is one that I had on my ready list, and it's just kind of going sideways here, finding support at the 21, not as strong as the others that I'm showing you. WLDN, this is Wilden Group, a thinly traded stock, less than a billion market cap, 150,000. But, the results are it's surfing its five, right? And it's, you can't argue with that. As a trend trader, and then it closed at 90% of its weekly range, up 8% last week. So I'm just showing you that there's a lot of strong stocks in this group. Mastech is another one, just pushing away from that base there. A nice 5% move last week. Um, ACM is another one. ACOM still set up in a base. So there's still, this is only up 3% last week. Yeah, this still got the cup with a handle. And I'm going to go through some stocks here that I think are still, actionable here. This is Fluor, another one in the building heavy construction group that has not really taken off yet. Still, sees setting up in a base here. So maybe they won't all move, but I do like that group. And I mentioned that there's a bunch of stocks setting up. I don't know if you want to call them laggards. I'm just going to show you the charts quickly. I'm not going to, dissect every chart here. You can see for yourself. The charts are, to me, set up, and every week that I've come in the last 5, 6, 7 weeks, I see 50, 60 setups that I like, and I try to narrow it down to 5 or 6 to start the week and then add up to 10 or 12. But it's very difficult to select out of 60 stocks, just 5 or 6. And so Shopify to me looks good. Thankfully, it didn't take off last week, otherwise, I'd be regretting it. Yeah, it was up 7%, but still set up in a base. Dutch Bros is another one, just pulling back to its 50 here, cup with handle. And I don't know why I'm not going to say anything. It's set up. It's just set up. Okay. I said I wasn't going to say anything. Just look at the charts. TW, to me, this is set up. All different industry groups, different types of stocks, BSX, set up in a group, a base, ServiceNow, obvious setup there. MPWR, this is a semiconductor fabless, in the AMD NVIDIA group. Yeah, just fantastic looking chart there. So it's hard for me to select out of all these. Casey just forming this little ledge there, not bad. Who else do we have? Oh, Disney. I showed you some of those building construction stocks still set up. Walt Disney. Yeah, this is a long base setup. It's got the blue dot here heading north, up 4% last week. Earnings heading in the right direction. Bob Iger's got it going on at Disney, I guess. Emerson Electric, you can see this one set up in a base. That's why it's so hard for me to pick just 5 or 6 stocks. Parker Hannifin looks good as well. Machinery industrial stock, AS. This is a China play, just forming that little ledge there. That one looks good. The HVAC stocks, obviously data center type plays. Look at this in the cup with handle pattern. Fortinet in the cybersecurity group. This one looks good too. It's got this elongated handle. What does that look like on the daily? Yeah, so just interactive broker, which I've never used, but I know a lot of people who do. And this one's set up in a nice base as well. Like I said, I'm not going to just dissect and go through every chart. It would take all day. Monday, software name looks good. VRNS, another one of these computer software names. Just that looks fantastic too. Twilio, yeah. I mean, I could go on and on, folks. There's a lot of stocks set up in bases. I'm going to stop here. I'll pick out five or six or maybe even 10 for Monday morning. I could go through like 30 more like this, but I don't want to. That's the my video for today. Thank you for watching at mcstockcharts.com. We never give up. Remember, the golden cross is supposed to be bullish for us, right? I showed you what happened the last time. So I believe we're going higher because the leading stocks are leading us higher, and there's still a lot of stocks set up in bases. I'm not one of these guys, money on the sidelines coming in. I just look at the charts, look at the leaders, and they're leading us to higher prices, including Nvidia. I have to mention Nvidia popping out of that year-long consolidation pattern. That's totally bullish for the market. It was up 10% last week. Microsoft, another one of these, leaders making new highs after a year-long consolidation. This one's popping out there. It looks like a 3 weeks type pattern there, maybe. But anyway, up 4% with the Nasdaq. So a lot of these, leading stocks are leading higher. Meta up 7.5% last week. And these are the big mega cap techs that drive the indexes, the S&P and the Nasdaq. There's a nice cup with handle breakout. Amazon did well as last week as well, up 6.5%, breaking out of that cup with handle. So those are the stocks that move the indexes. I'm not wildly bullish. Like I'm not stupid. I realize that there could be selling at the end of the quarter and the beginning of next quarter. There's going to be a rotation into other stocks. But overall, I'm bullish on the uptrend. I think we have a few more weeks at least of this uptrend before we worry about, some sort of massive correction. And I do expect some resistance there at the old highs on the Nasdaq of 20,204. I think we saw it a little bit on Friday, just a little bit of resistance as it hit the old high. There you go. Yeah, it passed it. 20,299 got up to 311 and sold off a little bit, some profit taking, and then we rallied into the close. But yeah, you got to expect a little bit of profit taking when you reach old highs, but I think it's going higher. And that's my story. I'm sticking to it. Thank you for watching. Never give up.